Begin with NVIDIA, the AI trade, and Jensen Huang's message to investors. Jim, you heard him this morning, talked a lot about sort of this evolution between being a tech industrial and creeping elements of a financial company, too.
Yep. No, I thought that this morning was a great contrast. Yesterday, we had a club meeting, and we were talking. Jensen wanted to meet the people who became millionaires. Who did he make a millionaire? Well, the club made him. Whether he did. Today was all about, I think, a total affirmation of the way people are spending because of the Industrial Revolution, and how this is the fourth, and how we all wish we invested even more. Over and over again, he talks about how it's not circular deals. It's just, boy, I wish I got in. I wish he got in. Mentions CoreWave. We have them on tonight. Michael Intrater, terrific guy. I just felt that his 1-2 punch made me feel that you have to be involved in this as an investor. Now, there is so much froth, and we're starting to see companies, I believe that, starting to see companies that are doing the secondaries. I've been waiting for that. They're validating the fact that their price is up, but we can't handle all the stock. We just don't want all the stock being dumped on the market. But at the same time, we have legitimate companies that must be bought.
In the meantime, that piece in the information yesterday on Oracle and their margins, you actually pushed this to get Jensen to address it last night. You want to take a listen to that?
Yes.
This is Jim's question and what Jensen said.
Today, there's an organization, a news organization, and put quotes around news, which says that Oracle lost nearly $100 million running out NVIDIA's chips. I know from the people I talk to that actually all these things are fungible, and Oracle's cost is so low that it's entirely possible that that number won't matter. But when you read these things, they lost $100 million. And I know that you've said to me over and over again, if you buy something from you actually get an immediately great return. You've demonstrated to me over and over again. When you hear something like this, what do you think?
Well, first of all, what Oracle does with NVIDIA systems is not easy. These things are giant supercomputers. You've got to build an infrastructure. It's got land. It's got power. It's got cooling. And then you have to operate these things. And when you're operating these things, when the customer doesn't get value from it, maybe the computer has problems, you don't get paid. And so even operating it takes a lot of skill, and then continuously operating it requires energy efficiency. And as you can see, operating a hotel takes a lot of craft and a lot of skill. Operating one of these AI data centers takes enormous amounts of engineering. And so when you first ramp up a new technology, there's every possibility that you might not make money in the beginning, but over the life of the system, they're going to be wonderfully profitable.
Right, I'm glad you said that.
They're going to do incredibly well.
Operating a hotel.
That was so, just comes up with these analogies that are so great, but wonderfully profitable. I know, I have to believe that the Oracle people were thrilled that there was an actual explanation about how you buy these things, and there's no immediate payoff. Look, when you're building a hotel, it's true. There's no payoff until about year 5, and I just feel like that what he's saying is when you build these things, you're not going to make money instantly. It would be great if you could, but the information story could be right at the beginning. But at the beginning, you're trying to get a trade-off like a Boeing plane. I would have used a Boeing plane as an analogy, because when you first get a Boeing plane, holy cow, you're losing money. It's only in later years that you start amortizing. Year 4 to year 23, Boeing plane makes a huge amount of money, maybe you 30 because the planes are so good. But we don't understand this new world yet. And so you could have a scoop that will look like not a foolish scoop, not a scoop at all, in a few years from now. But at the moment, it's a gotcha.
Yeah.
And the gotcha is, look, basically, what is that organization saying? Well, that organization is trying to break news, as they have the whole way, that NVIDIA is overvalued, that if you're short NVIDIA, you'd beat that, and you certainly would double down on your short, but you'd be doubling down at 20, at 50, at 80, at 120, and then you're done. you're basically at the card table and you're saying, listen, I'm going to get a 10 and I'm going to get a jack, and you run out of money getting 2 5s over and over again, and you split them.
So you do think that there'll be somewhat capitulation among the shorts, or whatever skeptic community there is?
They're lucky. I mean, the shorts see that there's a bunch of deals just this morning where stock is offered, and they feel like, oh, good, I know that there's going to be supply. And if there's too much supply, a lot of retailer has they've moved these stocks up. That happened in 2000. You saw that's what happened to the street. We weren't able to offer that. We weren't as clever as some of the other companies to be able to offer stock. But once everyone offered stock between March 15th of 2000 and March 15th of 2001, the number of offerings was extraordinary. And we were all overwhelmed with them. And the street the institutions couldn't buy them all.
Right.
The stock came down. That's fraud. That's what I'm watching.
Is that like...
You're probably going to need about $50 to $60 billion for the land-powered shell and all the computing and networking and all that, everything that goes along with that. And they're going to have to raise that money through, first of all, the revenues, which is growing exponentially, equity or debt, and they gave us the opportunity to invest alongside other investors when the time comes. And so it's not something we have to do, but it's something that they're giving us the opportunity to do, and I would love to do.
Let's bring in Melius Research Head of Tech Research, Ben Reitzes, to discuss. I mean, hearing from Jensen, just the last time we've had you on in a few days, there's been, more Jensen bullish commentary, more deals announced, usually around OpenAI, but we got the AMD one as well. Are you getting any questions from investors about whether it's, getting to be toppy?
Oh, sure we are. Sure we are. And we're telling them to sit tight. I mean, this reminds me of a little bit in 1997 and even 1996. I mean, we had Alan Greenspan say irrational exuberance, and then we had a lot of strategists that were, luminaries from the 80s say that things were over in 97, but we had 3 more great years of returns. And I'm not saying it's like that 100%, but we feel like this got a long way to go. Of course, people get nervous when they've made a lot of money and there's sell-offs, but the fundamentals look good. Go play with Sora AI, a new social media app for generating video, and then you know how much inferencing there needs to be. That app is incredible. OpenAI is going to need a lot of compute.
But it's all about OpenAI and NVIDIA. I mean, what does it mean for... And I know you don't necessarily cover all the hyperscalers. You cover the semiconductors, but there are a lot of potential winners here. There's the Meta and Amazon, which hasn't done much this year, and some of the others. Or is it winner take all? Like, how do you see ultimately winner and loser?
Well, we cover actually AI in general, and semis are part of it. We also cover Microsoft and Oracle and many others, including Dell. And we see a lot of opportunities to win here. In semis, we're kind of recommending the Elite 3 now, which are NVIDIA, Broadcom, and AMD. We think the TAM for compute and networking is $2 trillion by the end of this decade, and maybe even higher now. And all this inferencing and then autonomous vehicles and robots are really going to still build out the infrastructure. Sit tight. A lot of these apps are coming. We also think that Dell's going to have a role as enterprises roll out AI. We just pumped our target there to $200, and that stock's doing great and getting new life. And then CoreWeave is a up and coming hyperscaler that we're recommending, who is allied with Jensen, but going to get a lot of this overflow. And they're doing a great job. I think a lot more deals to come. And we're really looking forward to Oracle's Analyst Day next week because we've seen a lot of rumors and speculation about their margins. And we think Oracle's going to probably raise guidance, and we'd be buyers there into that Analyst Day next week.
Taking a look at NVIDIA as the new AI bank, not just the center of the innovation action with chips.
Yeah, I'm going to explain the bank analogy, but NVIDIA may be the most valuable company in the world, but it's also, to your point, becoming the AI industry's preferred lender. So Bloomberg reported the company plans to invest $2 billion in Elon Musk's xAI as part of a $20 billion funding round. Under the deal, about $12.5 billion will be raised as debt through a special purpose vehicle that buys NVIDIA chips which xAI then rents out for 5 years. NVIDIA CEO Jensen Huang told CNBC this morning about the importance of investing in the entire ecosystem of AI. Listen in.
The only regret I have about xAI, we're an investor already. The only regret I have is I didn't give him more money. We've made some really terrific investments, and largely my only regret is that we didn't invest more.
Backed by some serious capital, between a $100 billion commitment to OpenAI, a $6.3 billion cloud service purchase from CoreWeave, where it also holds a 7% stake in CoreWeave, and venture bets over 100 AI startups. NVIDIA has amassed over $100 billion in exposure across the entire AI ecosystem, and that number is conservative. But there is a pattern in these investments. In the CoreWeave deal alone, NVIDIA plays four, let's call it conflicting roles: supplier of chips, equity investor with a 7% stake, financier with buyback guarantees for excess capacity, and customer purchasing roughly $6.3 billion in cloud services. With xAI, NVIDIA is again both investor and supplier, financing a company that will buy its own products, buy NVIDIA chips. The xAI deal introduces what amounts to chip-backed debt, asset-backed securities where the collateral is depreciating GPU compute capacity. We can debate how that depreciation cycle is. Is it 6 years, 3 years, less? The question is no longer whether NVIDIA dominates AI hardware, it's whether the company is using its huge cash hoard to prop up demand for its own products, guys.
So the week has been dominated, really, as we said at the very top, by, in some respects, I mean, obviously AI deals. Yep. But in other respects, AI fears. Ken Griffin, sugar high. Dalio feels frothy to me. Even Paul Tudor Jones, who says the market's going a lot higher, this blow off top before you have an issue, feels exactly like 99. NVIDIA CEO Jensen Huang, he weighed in on that topic on Squawk this morning. Listen.
What's going on in the world versus what happened in 2000 is just dramatically different. You know, back then, as you recall, there were pets.com, hospitals.com, and all of the internet companies combined was, what, $30, $40 billion in size? If you look at the hyperscalers now, that's where the first tranche of AI infrastructure is building. If you look at the AI, the hyperscalers, that's about $2.5 trillion of business that's already operating today.
I mean, Bryn, that is a valid point. You do have the difference, obviously, that this time around, in terms of the spending, it's the biggest companies in the world with the deepest and best and biggest balance sheets that are doing the spending.
Right, and today they are doing the spending off their free cash flow, and the free cash flow is very, very high, with the exception of, as I said earlier, Oracle, which has gone negative free cash flow in their spending. But I think it feels there's elements to me more of 2021 where you see not the big hyperscalers, not the large caps, which multiples you can still justify, but it's like with quantum stocks, which obviously have a small position in IonQ, or some of the drone stocks, or even like a Robinhood and Palantir, which go up 5% a week. And so to me, you have to separate the two, where there's a lot of froth in some of these extreme companies, like we'll say quantum or drone, et cetera, that the multiples really don't make sense, versus the larger tech companies where the multiples do make sense. And I think where you are going to see, more cloud margin growth with a Google or a Microsoft. And so I think you have to separate the two. I think what Paul Tudor Jones said, which I'd forgotten about, is in October of 99 to March of 2000, the NASDAQ doubled. So doubled in 6 months. Okay, that's a different scenario than we have today. And I just think the market construct is different. But I think investors do need to be really careful with those, smaller names that have no E, have no potential of an E, and are trading at just these like nosebleed levels. Those could get cut in half so easily for a bazillion different reasons.
Goldman's Peter Oppenheimer, he weighs in, he dismisses bubble talk. Valuations of tech are becoming stretched, he says, but not yet at levels consistent with historical bubbles. This is less about a bubble in tech and more about the general conditions of low interest rates, high global saving, and an extended economic cycle. Biggest companies doing the biggest amount of spending with the biggest balance sheets, far different, at least according to Jensen Huang, from what we saw in 99, in a week in which a lot of very well-known people, investors, CEOs, weighing in on this topic.
Yeah, I don't know. I mean, when you look back then, the biggest and the best companies, Microsoft, Cisco, et cetera, these were not cash poor companies. They were not losing money. They were not free cash flow negative. Levered free cash flow was not negative. And they were good quality companies. They just overinvested. I think, again, the number was 80 million miles of fiber, enough to wrap around the Earth 3,000 times. We're probably doing something like that now. We just won't know about it for the next couple of years. So I would push back on that assertion. I would also add, he mentioned Pets.com, and I think this is important. Pets.com did not file to go public until February of 2000. So did Webvan and a number of other companies that people of a certain age will certainly remember. All of that was in the total blow off top that was late 99 and early 2000. There's a lot going on right now about which we should be concerned, and probably laying the groundwork for an overinvestment and a decline down the future. But if you think that this is akin to 1999, I'm sorry, but you were not there in 1999. It was way more exuberant than this.
The question is no longer whether NVIDIA dominates AI hardware. It's whether the company is using its huge cash hoard to prop up demand for its own products, especially in the near term.
Is it?
It's a question I would leave for our investors.
She's a journalist. She's not going to answer that.
I was asking you. I was just looking
looked right at her.
Yeah, but it doesn't matter where I was looking at you, but I was talking to you, just looking at her.
Of course that's part of the game. I mean, listen, there's nothing illegal what they're doing. I want to be crystal clear.
Vendor financing, whatever you want to call it.
Vendor finance has been around a long time.
Yep.
But if you go to Twitter, to the extent that anybody looks at it anymore, there's a lot of these Venn diagrams, or whatever you want to call it, out there showing the circular nature of exactly what Christina just described. So it works, I guess, until it sort of doesn't work. And there are a lot of other people now out there talking about the return on invested capital one needs to get on the amount of money being spent on this CapEx stuff. And it's an astronomical number. Now, everybody's geeked up because the CapEx is there, and I get it. But if you were to see a slowdown, which is inevitable, CapEx will get cut, and this whole this system that's been built on each other starts to sort of fade away, I think.
And what phase do they do? So if it's not illegal, which it's not, what phase does this normally happen in business? It's usually when you're a little over your skis and extended. And if you think about it, the chips business was always a commodity-based business. It was always a boom-bust business. So when do we get the bust? So I think AI extended that, but it seems to me that NVIDIA is sort of extending their own lifespan. Here's the bottom line, is that, Christina, tell me right or wrong, OpenAI makes not a lot of money. About $12 billion, we think.
Annual reoccurring revenue.
Revenue.
That's just revenue.
Oh, they lose tens of billions. I mean, the company is losing billions of dollars every week, every month, whatever it might be.
$11 billion is what the information was saying for just this year.
For just this year. So the company loses huge money because they're building out. NVIDIA, to your point there, the banker, they have the money.
They have a lot
Do
of
we know
free
at
cash
which
flow.
point OpenAI might start to make some of that money back?
If we knew that, then we could just price out this entire market and just determine, to Guy's point, when this bust will come, or just keep riding high.
Isn't that the whole point of the show?
The whole point, too, is we have to reiterate, it takes a while to build out this AI infrastructure, especially here in the United States. If we talk about immigration and how that has changed the game when we're talking about workers, you bring up power all the time. So I think that the question for a lot of these stocks is, how long is every investor's patience? Because yes, we're going to see a lot of buying in this next earnings cycle. Why? Because most of these deals with AMD are coming out in the second half of 2026 with OpenAI. So that's going to be helping the next year or the next 4 to 5 quarters. But then what happens after that?
Well, the pace,
your point.
Bonwin, I don't know. You might know. Is the pace sustainable? Because as we talked about a little bit last night, how much of this is 10 years of earnings and investment being pulled forward to now? Like right now, we're buying 10 years, 20 years of earnings and revenue.
20 seems,
maybe none.
20 seems on the long end. I mean, the truth of the matter is, like, nobody knows. Otherwise, it would just be like a math problem, right? You would have a close-in form, you'd have a solution, and you could go on about your business. What I will say is, what gives me some confidence is that if you look back to 99, 2000, we were talking about this type of investment, well, not this type of investment, but substantial investment being made in pre-revenue companies. And I would argue that NVIDIA would be highly criticized if they stood pat and did nothing. They're in a position where they can widen out their customer base. How many times have we said, look at the customer concentration, it's only the hyperscalers, and they know that we know that they're going to come out and compete. Now they're expanding that target addressable market. They're increasing that target addressable market. So for me, it makes sense. If you're in a position where you can do it and you're kind of taking you're helping these companies, I would argue, particularly in the leasing, because now they don't have the CapEx spend, they don't have the depreciation. They're able to kind of operate a much more cost-efficient method. So
it's like General Motors helping car companies build roads or build it, right? In a way.
Yeah.
You can't sell a car if there's no road, so you help the road builders.
Are you saying the risk is being pushed off to the neoclouds that are renting out the GPUs? NVIDIA doesn't have to do it. They're relying on others to do so. And the same thing with Microsoft and Nebius?
I think if you have a 5 or 10 year lease, clearly you have that situation locked in, and the person who holds that obsolescence risk is the lessee.
So then you are concerned about neoclouds then?
More so than NVIDIA, for sure.
We are constantly being told this is a bubble, an accident waiting to happen. Ever since the launch of ChatGPT in late 2022, the data centers build-out's been responsible for 75% of the S&P 500 returns, 80% of its earnings growth, 90% of capital spending growth. Thank you, Michael Semblus, Chairman of Market and Investment Strategy for J.P. Morgan Asset and Wealth Management, for calculating those for us. The bears want to throw freezing cold water on the whole AI complex, which is why they constantly compare it to the end of the dot-com era. I hate that analogy. The heavy hitters in this business, think Meta, Alphabet, Amazon, Dell, Micron, AMD, Microsoft, Broadcom, Oracle, and of course NVIDIA, all have incredibly deep pockets. OpenAI is a little more opaque, but they've had no trouble raising money. Oracle might be overspending on data centers. I would argue it definitely is. But worst case, they can sell some stock and offer a whole lot of corporate bonds. And remember, they have a tremendous track record. All of these companies have been criticized for spending on AI like drunken sailors. There's a cottage industry of bears who spent the last couple of years urging you to short these stocks, not just sell, but short them, especially the biggest short of all, NVIDIA. And they never stop. Even though they've been wrong every step of the way, I question how they stayed in business. I've been saying you either believe in the fourth industrial revolution as described by NVIDIA CEO Jensen Huang, or you don't. The bears don't believe it. Could they be right? Of course. But I've been telling people to just buy NVIDIA since I named my dog after the company when the stock was just under $4, and now it's at $189. So far, it's paid much more to be a believer. That goes double on a day like today when Micron rallied nearly 6%, Dell gained 9%, and AMD jumped over 11% on data center orders and accelerating growth rates. Those are like takeovers. As for the comparison with the dot-com collapse, most of the companies that went under back then had no earnings and little revenue. And a lot of them were dishonest. Their stocks traded on page views. Nearly everyone involved with the AI data center story makes real money. There's no real basis for comparison. I know that because I ran money in the year 2000. My hedge fund finished the year up 36%. Why? Because we shorted everything in sight. We knew that these companies were going lower. So I can tell you the AI stocks look nothing like those. I know one when I see one. Those had no earnings, very little sales, and bad balance sheets.
All right, I hope you're all doing great today. Last night, it was reported that NVIDIA is investing as much as $2 billion in XAI as part of a $20 billion funding round. Really quick, I want to recap something I said in today's first video. Today, Jensen reiterated that there are two exponential curves of growth, the exponential growth of AI usage and the exponential growth of AI's improvement. Both of these growth curves are compounding the need for more compute. And so looking forward, you have to ask yourself, will AI usage continue to increase? Will the quality of AI continue to improve? And will new use cases continue to be developed? I think the answer to each of those questions is almost certainly yes, as I discussed in today's first video. As AI's usage, AI's quality, and the number of end use cases all increase, the demand for compute from NVIDIA will grow even stronger. As I've mentioned in previous videos, while there are similarities between this AI revolution and the dot-com era, there are also fundamental differences in multiple key areas. First, the largest spenders have the deepest corporate balance sheets in the world. Second, the largest spenders are primarily funding their AI investments by means of their own cash flows. That was not the case during the dot-com bubble. Third, the largest spenders are not aimlessly investing in AI infrastructure in the hopes of eventually finding a use for it. They already have multiple uses for it, and they're investing heavily to try and meet extremely strong demand from their paying customers. And fourth, new use case development and mass public adoption of the technology are going to happen much faster than they did during the early days of the internet because the internet is already here, making new use case development and mass public adoption immediately possible. This drastically reduces the risk of long digestion periods and overbuilds of capacity like what we saw during the early days of the internet. Could there eventually be an overbuild rebuild of capacity? Sure, it's possible, but I honestly think we are at least 3 to 5 years away from something like that happening if it happens at all. Jensen seems to agree with this, as he recently said on the BG Squared podcast that we should not hit a glut in demand for at least a few years. All of that to say that I don't think we are anywhere near any type of bubble bursting type of event, not even close. Looking ahead, we have NVIDIA GTC in Washington, D.C. later this month, with a keynote from Jensen Huang scheduled for October 28th. Be on the lookout for any sovereign AI initiatives with the U.S. government or large-scale projects with U.S. companies. I say this because Jensen usually announces large-scale projects that are unique to the region where the GTC event is held, and this event is being held in Washington, D.C. Jensen told us on NVIDIA's earnings call that he is anxious to share more details about Rubin with us at GTC. I continue to be bullish on NVIDIA long-term, and I think the company has plenty of runway ahead of it. Of course, I think NVIDIA's data center business will continue growing strong. But there are also multiple large growth opportunities that NVIDIA is really just starting to capitalize on, including sovereign AI, enterprise AI, which Jensen believes is an opportunity worth hundreds of billions of dollars, many AI-native startups, physical AI, and quantum computing. I think most analysts are not adequately factoring many of these large growth opportunities into their long-term estimates. And I think NVIDIA's long-term growth continues to be underestimated by most analysts. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.